AstraZeneca has bowed to pressure from US President Donald Trump to lower the cost of its medicines for patients in America. The Cambridge-based pharma giant said it will provide direct-to-consumer sales to eligible patients with prescriptions for chronic diseases at a discount of up to 80% off list prices. The firm is also getting involved with the US government's new direct purchasing program, which will allow patients to purchase medicines at a reduced cash price. AstraZeneca said the move, which meets the new stringent requirements Trump has imposed on pharma businesses, would allow it to swerve any tariffs imposed on the sector for at least the next 3 years. But the firm did not set out how large a financial hit it would be taking from the price cuts. Chief Executive Pascal Soriot said the move helps safeguard America's pioneering role as a global powerhouse in innovation and developing the next generation of medicines. He continued, "It is now essential other wealthy countries step up their contribution to fund innovation." Shareholders don't appear to be overwhelmingly impressed by the move, with the stock falling around 1% following the announcement. One thing AstraZeneca didn't discuss was the financial implications of its commitment. On the one hand, the commitment means the pharma giant will swerve billions of pounds in extra costs that it might have faced had Donald Trump gone ahead with plans to slap big tariffs on the sector. But would this really have happened? Trump often talks the talk but doesn't always walk the walk, which is why many investors have begun using the TACO acronym, meaning Trump always chickens out. On the other hand, lower medicine costs in the US means lower revenues from AstraZeneca's biggest market, and that has to be paid for by hitting other markets with higher fees, a bitter pill for many healthcare providers to swallow. It's all part of AstraZeneca's pivot towards the US to escape the wrath of Donald Trump as he threatens tariffs on pharma firms. Trump has been a long-term critic of pricing disparities between medicines sold in the US and elsewhere. In July, the firm unveiled plans to invest as much as $50 billion in manufacturing and R&D in the US after ditching its UK expansion plans in a blow to the government's industrial strategy. The company said it will spend the huge sum over the next 5 years, including on a new manufacturing facility in Virginia, its largest ever single manufacturing investment. That was followed in September by a decision to upgrade its US listing by replacing its existing Nasdaq listing of American depository receipts. AstraZeneca said it took the decision to give it the flexibility to access the broadest possible available pool of capital. In the UK, the firm has abandoned its plans to build a £450 million manufacturing plant in Merseyside, blaming a lack of government support. For everything you need to know about this story, stick with cityam.com.